In our discussion of the balance sheet, let's start with assets. Here's a formal definition of an asset. An asset is a resource owned or controlled by a company that will provide probable future economic benefits. So let's talk about a few key words there. Probable. Doesn't have to be certain. If I've got land, for example, there's a probable benefit, but I'm not sure. Something can happen. If I've got a building, the building could fall down tomorrow. It's probable future benefit. Make sure that's a key word in accounting. Assets are probable future economic benefits, and economic benefit, future economic benefit. Although accounting tells us what happens in the past, a thing is an asset only if it's going to provide benefit in the future. If I do a balance sheet right now and list something as an asset right now, I'm not really saying something about the past. What I'm really saying is this thing is going to provide benefit in the future. So people always think accounting tells us what happened. It's a history lesson. No. If something's an asset, it means if accountants are willing to put something on the balance sheet as an asset, it means the accountants are asserting this has probable future benefit. And finally, this last, owned or controlled, this is actually quite interesting. You say, well, how can something be an asset if you don't own it? Well, let's take the example of a truck. I've got a truck that's going to last for 10 years. It's got a useful life of 10 years, and I have leased it for those entire 10 years. I have an exclusive lease. I have exclusive rights to use that truck for the entire 10 years. When I'm done with my lease, then the truck is junk, and it's just going to be sold for salvage, for junk. I'm going to use it for its entire useful life. So even though I don't technically own the truck, I'm only leasing the truck. I do not have legal title to the truck. I control it for its entire useful economic life. In a case like that, accountants are going to say, we're going to put it on your balance sheet. Although you don't legally own it, you control it for the large majority, in this case, all of its economic life, so we're going to put it on your balance sheet. Accounting gets past the legal niceties and the legal technicalities and says, let's look at the economic substance of what's going on here. So if you control something, if you control the resource, then you're going to list that on your balance sheet. An example here is leasing. Lease accounting is very interesting, and hopefully we'll have a chance to discuss that in the future. So let's look at some examples of assets. If you look at the balance sheet of Apple, you see they got cash. Cash is, of course, an asset. If you look at the balance sheet of MasterCard, what's the biggest asset of MasterCard? It's something we call accounts receivable. People owe MasterCard money. Maybe you're one of those people who owe MasterCard money. Is there probable future benefit to MasterCard of having those accounts receivable? Yes. It's probable that people will give cash to MasterCard in the future because MasterCard holds those rights, those accounts receivable. Walmart. Go into Walmart and look around inside the buildings. There's stuff on the shelves, that's inventory. Those are assets. And the buildings themselves are assets for Walmart. Delta, you see the Delta airplanes flying through the air, those aircraft, those are assets. So assets, we have an intuitive feel for what assets are. But make sure you know the technical definition, probable future economic benefit. Resources that are owned or controlled by a business. Those are assets.